Oh, this is Samira from Diamond Accounting Enterprise. I'll give you a short background about myself first. I am a CPA from Canada and US. I worked in accounting for 12 years, mostly in public practice when I was in Canada. CPA firms doing audits, reviews, notice to readers, tax returns. But I had a passion always for accounting, never enjoyed taxes. And currently, my full-time job is my business. I have a bookkeeping and accounting business. I'll link my website down below. You can find resources, what I'm going to talk about it today in my website. Um, if you have any questions about your business, you're running a business, active business, or you have a rental property, you rent your rental properties, you have passive income, you have questions, please contact me. Go to my website, you'll find my contact information there. Today, what I'm going to share you is what I encountered a lot lately in my business. There's a lot of small businesses out there, and at the end of the year, you take your information to your CPA who does your taxes, and not only they charge you for tax prep, they charge you for bookkeeping as well. What is bookkeeping? Bookkeeping is basically compiling and summarizing your financial activities into a meaningful form, accepted by the government IRS, which is profit and loss Schedule C in your 1040 tax return. So here I'm talking about LLCs, okay? LLCs are businesses that you actively manage and you run your business. If you have S corp, you're probably a little bigger, so you need to hire a bookkeeper like me, making sure you have all your monthly bookkeeping done, and you should be on payroll, making sure your payroll is being run at least once a month, and all that good stuff. So if you have S corp and you want to hire a good bookkeeper, there's a lot of bookkeepers out there, but to be honest with you, I found a lot of them are not good because they just take a training, if a few weeks training, and they call themselves accountant or bookkeeper. Um, they don't waste your money on them. Okay. Uh, find someone who has good solid accounting background. They're going to save you a ton of money. If you want to go cheap, you end up spending more to someone like me to fix the mess. Okay. Here I'm targeting this video to small business owners who don't want to pay an arm and a leg to CPA to compile this financial information and do the bookkeeping. They can do it themselves. So I'm going to walk you through from A to Z how to do it yourself so you reduce your tax bill, your CPA who or EA, whoever is preparing your taxes, they should be charging you less because you're providing that information to them and they don't have to compile and summarize this information. Okay, so what is Schedule C? Schedule C on your tax return 1040 is basically your income. You're going to put your name, your business name, your EIN, your social security number, business address, and accounting method, which most of you are using cash basis accounting method. Okay. And here you're going to show your income, if you had any returns, discounts, whatever, basically your net sales. And here we have cost of goods sold. What is cost of goods sold? So if you have inventory, okay, so if you sell products, let's say you have a hair salon, you have product sale, and you have basically revenue from services you provide. So you're going to put your income from services you provide on in line one, and uh, if you provide product and services, sorry, if you're selling products, the sale is already included in line 1 too. But cost of goods sold is the cost of the products that you have sold to your customer. How do you calculate this? Basically, you have to keep track of your inventory. When you buy inventory, you're gonna add the cost here, and at the end of the year, you're going to count your inventory, how much you have, right? And whatever cost of inventory at the end of the year you have, you're going to deduct it from the cost of goods sold here, and the net amount is going to go here, right? But if your inventory is small and your cash basis, which most likely you are, don't worry about it. If it's too small, expense everything. Just get the deductions here. The remaining are the expenses, non-inventory related expenses. So you're gonna have advertising, car and truck. Okay, so for car and truck, what is car and truck expenses? You're using this line if the business owns the vehicle and you are using the vehicle 100% for business, meaning the business owns the vehicle on your balance sheet, you're gonna put the vehicle on the business, and the company is gonna basically pay for the vehicle expense because you're using it 100% for business. What are those expenses? Gas, repairs and maintenance, insurance, whatever, car wash, toll, whatever is related to car, because it's a business car, you're going to put it in this line. Okay. I'll walk you through how to get to this number later, but I'm just explaining what these are. Advertising was self-explanatory. Commissions and fees. Commissions and fees could be whatever commission you pay to your to your sales rep. Contract fees. These are the ones that you issue 1099 for. Okay, you have a labor that you issue them 1099. These cannot be the ones that are on your payroll. So if you have W-2 employees, it does not go here. It's somewhere else that I'll show you later. Depletion or depreciation. So this is something that your CPA who does your taxes can calculate this for you. You don't have to worry about it because this is really the depreciation. Depletion is you take on your fixed assets. What are fixed assets? So in my example, if you have a company vehicle, basically wear and tear expenses going to be your depreciation. They add it to the asset pool and take a percentage of it as depreciation each year. So you don't have to worry about the depletion here. And the next line is employee benefit program. Employee benefit program is the health insurance or any other benefits you provide for your employees would go here, okay? And these are the ones that has to go through payroll. These are really the taxable benefits you provide for your employees. Anything that you run through payroll that are benefits like health insurance, or actually health insurance is the line. Uh, yeah, health insurance would be here. Or let's say if you provide life insurance, anything, any employee benefit would be in this line. Insurance, if you have liability insurance, would go here, line 15. Other than insurance, other than health, would go here. If you're self-employed and you pay health insurance for yourself, it does not show on Schedule C, but you give that number to your CPA and they'll put it in your tax return somewhere, but it's not in here in Schedule C, okay? But you give that separately. It's a separate number you provide to your CPA. I'll talk about the home office expense later on. This is something that you provide to your CPA as well. But let's just finish the list. I'll cover that part. Interest, if you paid any interest to your credit card to for loans or anything, mortgage or other interest. Professional fees would be any fees you pay to any professional like a CPA for tax preparation fee. Office expense, anything, like a lot of stuff could go to office expense. Pension and profit sharing. This is the 401k ones that you provide for your employees. Rent, if you have office rent or lease or machinery or other business property, repairs and maintenance, supplies, taxes and licenses. So be careful here. So taxes and licenses, if you pay federal tax to IRS or state tax, this doesn't really go here because that's not a deductible business expense. This is basically the licenses and fees you pay to do business or what have you and other taxes. So this is not federal or state taxes because those are not deductible business expenses. Okay. Travel and meals. You put it here, deductible meals. Be careful. If you meet with the client meals are deductible 50%, but certain meals are deductible at 100%. You just need to read the guideline, IRS guideline, to see which one are 100% deductible, which ones are not. If you have more questions, you can call me and ask me or call your CPA who does your taxes. Utilities, self-explanatory. So wages, any W-2 wages would go in here. So employee benefits we had here, wages are W-2 wages here. This is not your wage. If you're LLC owner, you're not on payroll. You don't take payroll. You take draws, okay? Because your income is taxed here and you can take whatever you want from the business as long as there's money in your business bank account. I'm gonna the rest of it is self-explanatory. I'm not gonna read through it. One thing I want to mention here, if you want to reduce your tax bill, if you want to, sorry, tax prep fees, or if you want to make sure you're not getting into trouble with IRS, God forbid, if you get audited. Make sure you have a business bank account that are strictly used for business. You do not commingle. So all the business revenue gets deposited in the business bank account and all the expenses are paid from the business bank account. You do not use your business bank account for personal expenses. You can, I'm telling this again, you can, CAN, take draws, meaning taking money out for personal use, but you cannot use the business bank account to pay for your grocery, for your personal utility, for home mortgage, what have you. So please have it separate. Do not commingle. If you need to use a credit card and you don't want to open a business credit card, dedicate one of your personal credit card for the business and just use the business expense with that credit card, not the personal. IRS is very big on this. Make sure you do not commingle. And if you are S corp, same thing for you. Same thing applies for the S corp. Okay. Make sure you do not commingle. And for the S corp, obviously, you should be on payroll too. You should have a reasonable payroll. Okay, so this was the Schedule C. You can go to IRS website. It's actually on my website too. If you go accounting at Diamond, accounting enterprise, this is my website homepage. This is all about me. DIY bookkeeping, which I have this template I'm going to show you later. I'm going to be uploading it here for you and the video as well. And resources are where you find a lot of good resources here. I'm going to talk about IRS mileage rate shortly with you, but you'll see a ton of good resources on my website. Okay, I'm going to go to my template. So at the end of the year, let's say it's January, February, you want to prepare your information for your CPA and you're a business owner, right? I have the template here for you. So bank version 1 is actually what you're going to be getting from your bank. Almost all of your banks provide transactions in CVS or CSV, whatever format it is, which is basically Excel. You're going to export the transactions from your bank, business bank, to an Excel. Okay, it's going to look like this. Bunch of transactions in and out. Sometimes the bank is going to give you the debit and credit. Debit is the money going out, credit is money coming in. Or they could just give you an amount which has minuses and pluses. If it's a minus, meaning money going out. If it's a plus, meaning money coming in. So if your bank gives you debit and credit, what do? You're going to copy the debits column and paste it here. Okay. And then do the same thing for credit. And you're going to copy the dates, paste it here. Payee. So let's see, let's say here, right? We have all these descriptions. You're going to copy the dates, you're paste it under dates. You have the payee here, copy, paste it here. Category is what I have linked here for you. I'm actually going to highlight this in blue. So the blue highlights meaning there is a formula or there's a predefined drop down menu for you to select. So I have itemized everything here for you to select. Let's say on January 2nd, 2023, from your tenant, whoever the tenant is, or from your customer, you received you received some income. So you're under category, you choose income, right? Or you could just type income and it will populate. But you have to choose one of these because it's linked to the other forms I'm going to show you here later. And you received money, right? You received $2,000 income. I'm going to type it here. If your bank provides the amount, you just copy the amount, paste it here. And the amount, if it's plus, meaning money coming in, if it's minus, meaning money going out. Let's say on January 4th, 2023, you paid Amazon for some supplies. You bought supplies for your business and you paid money going out. You paid, I don't know, $500 for it, right? So on and so forth. I'm just showing you example, but you don't need to type these. You're going to copy and paste it from the bank export you received. Okay. I shouldn't be pointing in minus here because the formula. Okay. Uh, you're going to copy and paste the information here. So this is your bank. And for credit card, you're going to do exactly same thing. But for credit card, usually there is no debit and credit. It's just the amount, right? You're going to copy and paste copy and paste the amounts here. If it's minus, meaning you spend the money. If it's positive, meaning you pay to the credit, right? Let's say on January 6th, 2023, you bought some stuff from Amazon. This time you office expense. You want to put it to office expense. You paid 400, $4,000, 4,550 on some office expense, right? You're going if it's you spent it, it's minus. If you pay to the, let's say if you pay to the credit card, you're not going to type. You're just going to copy again from your credit card. You're going to export to Excel, copy that information. You go actually to the Excel, copy that column, paste it in here, right? You're going to pay, but for the purpose of this video training video, I'm just going to type it. So for payment, there is no category because it's just a payment. It's not expense, it's not revenue, right? And it's usually positive amount. It should be positive amount, right? So on Schedule C, you go to schedule. So once you have all the income and expenses for your bank and all the expenses on your credit card here, you just have to copy and paste and assign a category for each expense, right? You're going to choose it from here and choose a category for bank as well. This should populate for you. So this income 2000 is coming from this income here. And office expense from credit card is pulling, supplies is pulling too. And in this example, I have losses because I'm showing $2,000 revenue, this much expenses, and there's a loss here. Does that make sense? If it doesn't, if it's too complicated, if you're not savvy with Excel, you don't have to be savvy with Excel, you just have to follow the instructions here. You should be fine. Please give me a call and we can work something out together. Okay? I'm highlighting some items here. I spoke about car and truck earlier when I was showing Schedule C. So this is when you have vehicle owned by the business. If you do not have vehicle on the business, but you're using your personal car for the business, there's mileage allowance we can give you. If you're using your personal car for the business cannot pay for the gas, insurance, property tax, tag, whatever for your car. That's not allowed. But we can give you mileage. What is mileage? So you go to my website. I was showing you earlier. Let me just bring my website over for a sec. By the way, if you Google me, this is my Google page. You go to my website, you go to resources, you go to IRS mileage rates. Each year, mileage rate varies. Right now, you're in 2024, you're wrapping up 2023 taxes. So you're going to use 2023 mileage rate, which is 65.5 cents per mile you drive for the business. If you have home office, which you should, if you have home office, which you should, each time you get out of your house to do anything for the business, you are in business and that trip is considered a business trip. Let's say you go to networking event, you go to meet a client, you go to do anything for business that would be considered a business trip and you have to keep a log how many miles you've driven for the business, okay? And let's say you have driven, so here the formula is linked, but really you cannot pay any gas or anything from the business. You would have to uh, overwrite this formula here. What you're gonna do 65.5 cents per miles. Let's say you have driven 2,000 miles for the business in a given year. So this is how much 1,310 you're going to be claiming as mileage here. Okay, this is what you can claim. You cannot claim, excuse me, you cannot claim business from the business your gas, insurance, whatever for the vehicle if it's a personal car you're using for business. But if it's a business car you're using for business, the business will be paying all the expenses, but you cannot use the business vehicle for personal use. Okay. So let's say you have made really good money, not 2,000 here, $10,000, right? And you have income. Oh, just to back out for a sec, if you have losses here, which is fine for roughly about 3 years to show losses, and these losses can be deducted from other source of income. Let's say you have W-2 income, your spouse has income, you can basically offset this from your W-2 or other source of income. If this was a loss from your rental property on Schedule E, you cannot deduct it from other source of income. because that's a passive loss. Passive loss can only be deducted from passive income in future years. So you get to carry it forward to future years and you're going to deduct it later on when you have profit, okay? But if you have active losses, which is fine for about 3 years, if you're running losses more than 3 years, IRS will be after you. They're going to say this is not a business, this is a hobby. So they're going to disallow the expenses and you just report the income, pay tax on the income. Okay, so just keep an eye on it. You cannot run losses for more than 3 years. Okay, so let's say we had a really good year, we made profit in here, and what can we do with it? The beauty of owning your business is you work from home or you have home office, you can have home office, right? What is home office expenses? So let's say you you have a small room in your house and you have desk computers, chair, office supplies, whatever, right? Scanner, printer, whatever. Um, those are actually 100% deductible from the business, and you can put it to office expense or supplies or whatever, right? What's in actually inside your home office, your laptop, your scanner, your printer, keyboard, mouse, pen, pencil, paper, whatever, right? But there are other expenses, like you're using your home for business, so obviously you're paying for home insurance, you have utilities, you have property tax, you're probably paying mortgage, so there's mortgage interest. What about that? Because you're using your home for business, how can you could get compensated for all basically home expenses that are off books? I told so home office expenses that are off books, meaning your mortgage interest, your home insurance, your utility, gas, whatever, your internet, your phone, if you're using your phone for personal too, that's what I mean. So what about those? So there are two ways of doing it. Either you take a percentage of the home office you're using and take the actual cost. Let's say you have home insurance, you have property tax, you have utilities, which are like gas, water, sewage, um, mm, electricity. Sorry, my electricity, whatever. Oh, internet. This is your home internet. Phone, if you have your phone, that your personal phone you're using for business, and you have mortgage interest, right? So what you can do, let's say you pay 2,000 home insurance, you pay 8,000 for property tax, there is like 20,000 for these utilities, and there's, I don't know, 10,000 on mortgage interest, right? This is $31,000 of expense for the whole house. And let's say your house is 3,000 square foot. So the cost per square foot is really $10.33. And your home office, this is your whole house square foot. And this is the cost per the square foot. And your home office is actually only 510 square feet, right? What you're going to do, you're going to take the square feet of your home office times the cost per square foot. So this is the actual expense you can claim. You can also claim depreciation here too. You can have depreciation, but again, that should come from your tax return that the CPA provides. So you basically give them this information, and the cost of your house, they'll calculate the depreciation for you. There's another method which is much easier and less troublesome than this that I prefer is a flat fee that IRS allows is $5 per square foot you use. In this example, let's say if you're using home office times $5 per square foot, you get this much. This is a lot safer to use. I mean, these numbers could be lower, could be higher. It's up to you. But if you go with this method and you take depreciation, if you sell your house, you have to take into consideration the depreciation you have taken before. And there's a formula to calculate the gain or loss on your house. The safest, easiest way is just go per square foot. And honestly, these numbers were an estimate. These could be lower. Okay. If you have profit, you can take $5 per square foot of the house and claim the home office there. But if you have losses, you're not allowed to increase losses by claiming more home office expenses. If it was, again, if it was supplies, computer, whatever, that's still okay to put it on Schedule C here. But home office is tied to the net income. If there is net income, there's a profit, you can claim it. If you have losses, you cannot claim this $5 per square foot or this method up here. Okay. Schedule E, quickly. If you receive rent, this is all formula. You don't have to input anything. You basically only input these two, right? Credit card, sorry, bank information, copy paste, and so the ones that are formula or there is a drop down menu is highlighted in blue. So the non-highlighted columns, you're going to put information. And credit card, same thing, and it will get linked to here. Travel for rental, usually the rental, if you own rental properties, the rental business doesn't own the vehicle. It's a mileage. You basically take the number of miles you've driven for the business, go to IRS website. See, for 2024 is 67 cents. You go to IRS website, see the allowable mileage rate, and you calculate it that. For mortgage interest for rental, you have to be mindful. It's only the mortgage interest. The principal portion is not deductible. So if on your bank you're paying mortgage here, you cannot deduct the mortgage in here, right? You have to split the portion, that portion, or you just look at your provider should give you the mortgage, the tax statement at the end of the year. You just pick up the mortgage interest portion here. And if you're escrowing taxes, same thing. You're just going to pick up the tax or the tax assessment from the county. You're just going to put it here because sometimes the insurance and taxes are escrowed and paid from um, mortgage. You just have to be mindful to split it and make sure it's correctly reported here. Okay, so this is what I have. Hopefully it helps. It should help reduce your tax prep fee. If you're following this and they're still charging you, your CPA who does your taxes is still charging you the same, they're pocketing the money. Just come talk to me, okay? And hope you find this video helpful, and I'll be making more of these. Just comment or call me, see what kind of videos you would like me to make for you, and I'll be more than happy to do it. Okay. Thank you for listening. And if you have any questions, please call me. You know where to find me. Have a great day. Bye.